Thanks everyone for coming to our office panel. Thanks to our panelists. My name is Lydia Dinkova. I cover commercial real estate for The Real Deal. And I want to introduce our panelists. We have Ryan Holtzman. He is a landlord's broker with Cushman. He is pre-leasing some of the preeminent office projects in South Florida, Wynwood Plaza, the 5th South Beach, 2850 Tiger Tail, the Related Group headquarters building that Related already completed. And he also worked on the leasing 830 Brickell, the 830 Brickell office tower. I don't think that tower needs an introduction. We have David Moret. He is founder of Highline Real Estate. It's an opportunistic investment firm. Early this year, Highline Real Estate partnered with Lone Star Funds and Square 2 Capital on a $221 million purchase of a downtown Fort Lauderdale office tower. We're going to talk about that. And we have Donna Abood. Donna Abood has extensive experience representing tenants in leases, in office leases in South Florida, mostly with Avison, and most recently she joined Savills as a Florida co-lead. And during the South Florida office boom, she also represented Corient, a Canadian asset management firm, which doubled its space at 830 Brickell. All right, so I wanted to start the conversation with an overview of the market just quickly. Clearly, nobody expected South Florida to prosper as much as it did in the early years of the pandemic lockdown. But at this point, we're no longer seeing the likes of Ken Griffin, Steve Ross, Kirkland & Ellis, and Corient coming to South Florida. We're not seeing those headlines anymore. We're not seeing them lease those big blocks of space. So I guess I'll throw the first question to you, Ryan. How are you seeing demand change in the past year to year and a half compared to the boom we had during the pandemic?
Thanks, Lydia. I'm going to preface by saying that if I do get a call from a 917 number after the elections last night, I'm going to answer it. So it could be anyone from New York. So I think it's going to be very busy for the next few months into the year. I mean, look, the post-pandemic story was incredible. We had more new-to-market tenants in Miami than ever before. Rental rates tripled, almost quadrupled in some submarkets. Since then, most of those buildings have filled. There are multiple buildings under construction that we'll touch on later in peri-urban locations, more boutique, that are starting to absorb those new-to-market tenants that are coming in. And I think that the next pipeline on Brickell, the next pipeline in certain areas like Freedom Park, I think it's going to change the dynamic for Miami. And we're going to see corporations that never really set foot here in Miami, they're going to plant their flags here. So I think we're going to see a very, very busy next few years.
Okay, Donna, what do you think about that? How would you say demand from out of state has changed since the pandemic boom, and what can we expect on that front?
We would have all thought that when the pandemic boom happened that all these companies were coming in, they were going to absorb space, and then that's it. Like after a while you run out of water, right? And that they're here. But on the contrary, with them all coming, they brought Miami to a whole new level of business enterprise. And so now, just when we got up to this pinnacle and we thought, we're going to plateau, they're not coming anymore, they're here. Nope, they're coming all the more because we are the place to do business. And what makes it even more interesting is our geographic uniqueness of being where we are and our connection to Latin America, and that Europeans want to come in to get to the US as well as Latin America. It's their jump-off spot. So we're so uniquely positioned that it's something that will never change, really. We'll always have the edge, I believe.
Yeah. All right, David, we're hearing a lot of positivity on the leasing front. I wanted to turn to you for investment sales. Clearly, interest rates are still high. Treasury note yields are still relatively high. Tell us, what are you seeing? Are institutional investors back in the game? Are lenders back in the game? Or what's going on with property valuations for offices?
Yeah, I think Miami is really one of the most unique office markets in the country, maybe the world. And there's, what's happening in most markets, office is still a four-letter word. And it really is, from an institutional perspective on the investment side. So, historically, institutional investors wanted to allocate 20+% of their portfolio to office. And after COVID, they all decided they needed to reduce that allocation. And so they looked at their portfolios and said, we need less office. So first of all, we're not buying. There is pretty much zero institutional capital chasing office these days. And what they're doing is they're looking at their portfolio and saying, if I have to sell office, where am I going to sell it? Well, I'd love to get rid of this 50% occupied building in Chicago, but if I do, I'm going to take a 70% loss. So instead, I'll sell a building that I bought 10 years ago when rates were half what they are today for basically the same price I bought it 10 years ago for. So what we're seeing, if you look at the trades over the last couple of years, 701 Brickell, 801 Brickell, both institutional ownership rotating out, being bought by opportunistic capital. Our acquisition in Fort Lauderdale, institutional capital, selling it for the same price they bought it for basically, 10 years ago, even though rents are twice as much. So it's this unique market where fundamentals are strong. There's been crazy rent growth. Rents have basically doubled since COVID. There is no institutional capital on the buy side. So opportunistic investors are basically buying core properties that they never could have touched before because of that capital disconnect, in the markets.
Yeah, definitely. And I'm glad you brought up 701 Brickell and 801 Brickell. I think Elliott Management bought 701, Monarch Alternative and Tourmaline bought 801. I wanted to ask you, generally for those deals where cap rates higher, do you feel like even though there were multi-million-dollar deals, there was some price suppression there?
I think they were fantastic buys for the buyers. Like in a historical environment, like if you roll back pre-COVID, either of those buildings go to market. If you're not an institutional source of capital that doesn't need debt, that's just closing cash at a, call it high single-digit unlevered IRR, you're not even in the game on those buildings. So, the first 801 traded early. In 2023, if you wanted to buy office, if you didn't have a seller that would finance it, there was no debt. So that was a fantastic buy, and I think they already cashed out of that deal with a refi. 701, same thing, just an incredibly unique window for opportunistic buyers to acquire core assets at opportunistic pricing. So you got to remember, those are 7-ish cap deals, but the embedded rent growth in those rent rolls is incredible, right? Rents are now, Ryan, Donna can tell you, but $130, $140 a foot in those buildings. It may be going up, and I'm guessing the average rent in the rent roll was, under $100 a foot, probably closer to 90.
Yeah, we leased 701 as well prior to the sale and currently, and our first deal when we got on board was essentially in the low 70s, and now we're trying to do deals, and we think we'll do deals above 150 a foot gross.
Yeah, and we'll get to rental rates. I did want to ask one more thing on the investment sales side. We have seen a few foreclosures and a few landlords avoiding foreclosure by selling last minute. David just told me more about that. Is this just an effect of higher interest rates and difficulties to refinance loans, and how widespread is this kind of distress in South Florida?
We are, in my opinion, in the very early stages of the office distress cycle. So interest rates going up are certainly a factor, but valuations of office buildings have changed. It starts at the top. If there's no core bid for office, you work down from there. And so, people who bought office buildings pre-COVID when cap rates were in the 6s, and that's middle of the road cap rates, they've got a valuation problem, even though they've had some help in South Florida at least, or throughout Florida really, from the positive demand. So I think there's a lot, lenders have not wanted to take back office. They're just doing everything they can to avoid it. So we see a lot of office deals where the can's being kicked down the road. Eventually, as people are not reinvesting in the buildings, income decline, value declines further, and then you hit a critical point. So we've actually been pretty active over the last year or so buying debt on non-performing office deals, and I think there'll be more and more of that, for years to come.
Right, because a lot of this kind of distress is also opaque to the general audience. It's not in records. It's just forbearance that landlords are working out. So there could be a lot more playing out than what we know of.
Yes, yeah. I mean, there's so many deals out there where it's covering, the income is there, but the valuation is 100% loan to value. Maybe it's worse than that, and owners are doing the bare minimum to keep things going. And the lenders, particularly banks that are regulated, do not want to accept the law. They don't want to book the loss. The big money center banks are more likely to sell loans. We've seen some big note pools. We bought some loans from the money center banks. But the more regional banks are more inclined, if a sponsor's willing to do some kind of pay down and keep the deal alive, they'll keep going. But if the loan's 100% LTV, something's got to happen at some point in time.
Right. All right, last question I'm going to ask for investment sales before I throw it back to leasing is, I'm wondering how long do you think this will continue for? For example, are the 225 basis point interest rate cuts helping out this year or not significantly? Are we going to continue to see the same story of this distress play out next year?
Look, long rates are basically unchanged, right? We've got a 10-year Treasury that's something like 4.1 today, and they didn't move in the last cut. So, and we just had unusually high short-term rates. So there's no question that the debt markets have healed dramatically. I mean, we were getting quotes for value-add office on bridge financing a year ago, and the spread was at least 500 over. And now we're seeing, in the high twos. So transitional office buildings, half the rate or half the spread anyway. So it's going to help, but it's not going to solve all the problems. I think we're going to continue to see a higher cap rate environment from office, just as institutions have reduced their allocation. So, I still think this is going to there will be a distress component of the market for several years. Not all the market. There'll be good trades and bad trades. And as the leasing team, I'm sure, will tell you, there's a flight to quality on the leasing side. So the great buildings are doing really well. And if you're in the middle of the pack, you're suffering a little bit.
Right, flight to quality on the leasing side, but still some trophy investment sales in Brickell and downtown, but still at higher cap rates and maybe some suppressed pricing. All right. Donna, I want to throw this over to you. You and I talked about this. So obviously, South Florida got a great influx of out-of-state companies in 2021, 2022. It's not as robust right now. I really wanted to hear about how has the business of representing tenants in office leases changed? Tell me, in terms of contract negotiations, tenant improvements, any other significant changes you've seen that changed the brokers' side of things?
Thank you, Lydia. It's extremely competitive. It's always been competitive, but competition is now at a really greater height. I think the tenants that have come in the market are much more sophisticated as well. They've come from, I see Ryan shaking his head, their expectations on a transaction and what can be negotiated are far beyond what we used to have as our local companies. Miami was really a market of mostly local business, but with COVID, we've become headquarters for companies small around the world now, and they come with their own expectations. They also expect to have the space they want to a high level, high standard of quality of construction. The demand of space has been so robust that landlords have not been able to keep up with the construction, and the city cannot keep up with permitting as well. The time to get a permit and construct space is taking about, 10,000 square feet, average size suite, 10 months. And companies just don't have that kind of time to wait any longer. So as a result, one aspect we're seeing changing is landlords doing spec space. A lot of spec space out there. Spec is a space that's already been designed and constructed with all new current improvements, so brand new suite. And landlords are taking a little bit of a roll of the dice on that little risk in that, will this space be desirable for most companies? So they have to design something that's very generic, but companies don't want to wait. They cannot wait 10 months to get into a space. And by the way, that's after negotiations, okay? That's after leases signed, and that first part probably took at least 4 to 6 months. They don't have that kind of time. So quick to the market, getting the space quickly into the market and being delivered is important to them too.
And I feel like the notion that our permitting process for tenant improvements or any construction is very bogged down, and we keep hearing that. Ryan, I'm wondering what has changed for you in terms of the way you do business.
Wow, it's an incredible story. Pandemic hit, March of 2020. Wasn't sure if anyone was going to come back to the office. Moved to Colorado, open up a bagel shop or something. Career's over. And then that summer, we started receiving calls for 830 Brickell, which changed the landscape for Miami, rental rates, the folks that have come here. So it's changed dramatically for me and my team. For 830, we started our first deals in the 70s, and post-COVID, several years later, we're at 250 plus a foot in terms of rental rates, just in a short period of time. So I think, look, there's going to be a ton of flight to quality, as Donna said. There's going to be a ton of new-to-market tenants coming to this city, and I think the future is very bright.
All right, I'm glad you brought up 830 Brickell, and we were talking about that earlier. I guess people want to know, and I'm wondering too, why was this building so successful? Was it timing, or was it something else?
I think it's a mixed answer. I think timing was amazing for 830. It was one of the only trophy office buildings being built at the time, and we had a crazy amount of demand from all around the United States. We did deals out of New York, Chicago, LA. We did a deal with Donna, with Corian for 60,000 square feet, new company out of Canada. And the majority of the tenants at 830 were new to market. We did Microsoft, Thoma Bravo, Kirkland Ellis, Sidley Austin. You name it. And a lot of these firms that decided to plant their flag here and move down, then the professional services started following. And we think that's the trend moving forward. And I also believe that the initial takedown of space, and Donna, I'd love to hear your opinion. I think it was very prudent by some of these groups, the .72s and the tenants that I mentioned. And I think they're going to grow rapidly in the future because the talent is here. Kids that graduate from college and their MBAs, if they're thinking finance, they're thinking New York or Chicago. But now Miami's kind of first on the list for a myriad of reasons, just quality of life, et cetera. So.
Right. And I think, Donna, generally South Florida wasn't a big pre-leasing town, but this changed in recent years. Can you tell us more about that?
The speaker sounded a little foggy there. Could you say
Yeah, I said generally South Florida wasn't a big pre-leasing town, especially for pre-leasing of offices. Tell me more about that change.
Yeah, Leah, that's an interesting question because prior to COVID, when developers are coming out of the ground wanting to build a building, they didn't get out of the ground yet. They'd say, we have to get 50% pre-leased where we can put a shovel in the ground. David, you remember all that? Yep. And leasing agents would say, what? It's not going to happen. You build it, they will come. Pre-leasing was never really successful in Miami at all. Now, these buildings are coming out of the ground, which Ryan can certainly explain some of his he's got listed. They're pre-leased before the buildings are even completed. Some are 100% pre-leased, but all of them are a good portion pre-leased. And it reflects the demand again, where Miami is today and the kind of city we become.
Right. Absolutely. And Ryan, so you are pre-leasing the 5th Miami Beach. I think that's a project by Busy and Bo Gillian, Sameda and Corona. Tell us, what is the asking rate there? Tell us about that, and tell us, what is the interest? Who is interested in leasing this building? What types of industries, and where are they coming from?
Sure, yeah. The 5th Miami Beach is a jewel box in the heart of south of 5th. It's only 50,000 square feet compared to the other buildings that we mentioned. But again, it's that flight to quality. Miami's never seen a boutique building like this ever built in terms of amenities, in terms of views, in terms of what's on the rooftop. And the folks that have moved down here, a lot of them have settled south of 5th and in the area, and they want an office where they live. And so the 5th has had a ton of demand. We're close to 90% in terms of deals that we're negotiating on, and we're hitting record rents between, call it 180 gross all the way up to 240 gross, which are records for the city.
So you said close to 80% spoken for. I remember there was a financial firm, J. Goldman, that signed the lease there early on, but that's the only announced one. Are the rest signed leases or letters of intent, or?
You'll probably be calling me in hopefully 30 to 45 days on these deals. So.
Well, I also am wondering, you are leasing Wynwood Plaza. It's a huge project. I know you're working with your partners on that one. It has 266,000 square feet of offices. Oak Grove completed this. One King Concourse, I think that's one of the more boutique ones in Bay Harbor, Olive and Banyan in West Palm. I have to ask, for example, Wynwood Plaza has announcements of Amazon leasing there, Marcelo Clores Group, and I think is a law firm that leased there. However, I'm wondering how much of a commitment is there for some of the other space, and is the fact that there is a bit of a slowdown in out-of-state companies leasing big blocks of space worrisome, especially for this project or for any of the other projects you're pre-leasing? Is that something that's worrisome to you and your team?
It's not. I mean, there was a little slowdown in Wynwood, but the velocity's picked up tremendously. With Amazon coming in, I mean, they're a magnet. They're going to attract different firms that want to be around them. Oco Group signed a lease there. We have probably 2.5 floors that we're negotiating leases on, and I think within the next 6 months to a year, we'll be fully leased. There's just not enough good product for these new-to-market tenants that are coming in to settle in. And to Donna's point, a lot of the groups that lease space in 830 and other buildings, they took temp space, they took the spec space during their construction, right? So there's just not enough product in terms of what the demand is here coming to Miami.
And which of the buildings you're pre-leasing, I'm curious to find out, has the highest asking rent?
That's a good question. I would say probably the beach right now, but the Grove is also going to have some incredible rental rate in terms of where we're going to be asking and where we're doing deals. We're representing Ziggurat, getting built by Alan Morris. It's an incredible building in the heart of the Grove, representing Vizcaya Capital on their boutique 40,000 square foot building. I mean, we think we're going to be close to 200 a foot during the process.
Vizcaya, that's in Coconut Grove?
Correct. And it's at the end of the day, it's when these groups come into town, they're used to the Class A buildings in New York and Chicago and California, and they're willing to pay up to be in the best buildings. I mean, they want to be able to attract the best talent, retain the best talent, and have the best amenities within the entire market.
All right, so what's the asking rate again at the 5th Miami Beach? How much per square foot?
Call it 230 to 240 gross.
And Vizcaya and Coconut Grove was 200?
We're hopefully going to be getting 200.
All right, Donna, do you want to weigh in on those? 200 at Vizcaya and Coconut Grove, 230 on the 5th South Beach.
Ryan, that's a lot of money.
That's
a high rate.
You asked earlier about you mentioned lack of companies coming down, but look, 830 Brickell was a big chunk of space. There is no premier Class A Brickell space of any size that a big company could move into today. So I'm pretty sure Ryan and Donna would say there are requirements that are soft looking at the market that just don't have a home. When you talk about the beach, right, like there's only so many people that there's a handful of people that need space like that, super wealthy, private family office folks, and there's not that many options. So it doesn't mean that the entire beach is a $200 market, but if you build great product, like these people, they're insensitive to what the rate is, right? And that's going to be isolated buildings in each market, Bay Harbor, Coconut Grove, Miami.
Yeah, these are all incredible boutique buildings in the best peri-urban locations in the city.
Right, definitely South Beach they're very boutique buildings. Well, since we're on South Beach, let's maybe Ryan, do you want to expand on this one a little bit more? There's been a lot of push from public officials and stakeholders to turn it into more of an office market. The firms largely leasing there are financial firms. I mean, do you feel like it's changing? Do you feel like it has a ways to go, or it's never this dream is never going to pan out?
I think the beach is going through a renaissance right now. I mean, there's more new restaurants that have opened up in the past 6 months than the past 3 years. And a lot of decision makers that decide to move down to the Miami, usually the first look is the beach. That's what we see, if not Coconut Grove, Pinecrest, Coral Gables. So I think it's going to be a robust group of people that are coming in, and I think the future is extremely bright for the beach.
And
can I ask a question?
Go ahead, sir.
But don't you think, I'm just going back to, I didn't get to finish my answer about the rates. Don't you think there'll be some point in time where companies are going to say, enough, I'm not going to come to Miami for 250 a square foot? That's, I would think there's a point that enough is enough. for a company, and instead they'll go to Broward, right? Or they'll go to Orlando, which is a very soft market, but there's lots of space there. So that, we will certainly reach that point where enough is enough on rent.
Well, if you don't mind.
Okay.
You want to continue? I think with these smaller boutique buildings, they're family offices, they're hedge funds or private equity firms, and the size of the square footage of the deals aren't 60,000 feet. They're 3,000, 5,000, 10,000 feet, and for them, again, it doesn't hit their balance sheet. It's a small amount based on the quality of where they want to be and the type of assets. Now, in other markets, other sub-markets, at Freedom Park, for instance, that's being built. That's going to be much larger tenants. I think we're going to see corporate groups relocating from, Charlottes of the world, the Atlantas of the world, and that's going to be a different price point and a different type of product.
Where are the corporate tenants going to be relocating to Miami Freedom Park firm? What like local or out of state or?
I think we'll see a good amount of local corporate tenants. The project's unbelievable. It's 50 plus acres. It's going to have unbelievable parks. It's going to have 500,000 square feet of F&B. We're marketing right now a 250,000 square foot office with another, call it 750 to build. So we think they're going to be coming from other markets, Charlotte's, the Atlantas, where the big corporations are now that have not entered Miami.
And what kind of industries are they in? We spend quite a lot of time talking about financial services. What kind of other industries? Maybe Donna, if you want to take that one. What kind of industries are demanding more space in South Florida?
We've seen a surgence of law firms. A lot of the national law firms have actually come here to chase their companies and make sure they maintain their position as being their service provider. Healthcare, life sciences continues to be an influx of companies too.
And I can't help but wonder regarding Miami Freedom Park. A lot of relocation is expected. I think you also said possibly from some of the other more suburban corporate campuses down here, for example, Waterford or Doral. Does this help South Florida's office market's health in general? Because you're not really, or the project technically wouldn't be pulling a tenant from out of state. It would be pulling a tenant from a local building that will then be vacant or need to be filled. Does it really help the market grow and move forward? Ryan, if you want to take that one.
Yeah, I think it's a great question, but I think it will. Certainly there'll be some tenants that relocate from other submarkets, whether it's Waterford, Doral, Coral Gables. But again, we're fielding calls and speaking to groups that are, haven't been in this market and they haven't had an opportunity to move into the type of building or quality that, for instance, Freedom Park is building. So I think it's an outlet for these groups that are coming into this market, and it's the perfect timing for these larger corporations.
One other comment. We haven't talked about this yet, but we keep talking about all these buildings being built, which mostly are boutique little buildings in wealthy neighborhoods where some wealthy, hedge fund person's going to put a family office and not really expect employees to come to. But we've got something like 5 million square feet of office space in Dade County, representing roughly 10% of the entire office market that has either been demolished or is going to be demolished. So, what's happening in the office market is a lot like what happened in retail for the last 15 years. Everyone looked at retail 15 years ago and said, we're over-retailed, no one's ever going to shop again, we're going to shop online. And then we spent 15 years not really building a lot of space and demolishing space. Bad malls went away, Sears went away, things like that. Same thing's happening in office. We've got a building out in Doral that, 5 years ago we were doing, we bought it 4 years ago, we were doing deals at $31 a foot, and now the last several deals are $45, and a lot of our demand are tenants that are getting pushed out of buildings that are being torn down for industrial multifamily. So you've got this office market that's shrinking way more to a larger degree than these little additions that we're talking about, and you've got a flight to quality because tenants want to get their employees back in the office, and if they don't have quality offerings, they can't do that.
And we've for sure seen plans filed and work beginning on redeveloping some of these more suburban assets, namely the Ryder Systems headquarters out in West Miami-Dade. David, didn't you tell me that you also have a project in Weston? It's 3 office buildings and you're selling 2, but you're keeping the third to redevelop under, I want to say, the Live Local Act?
Yes, in Doral. And that was like another fun, it's the same building I was telling you about. So rental rates are fantastic. The leasing demand was outstanding. We could have filled the third building up many times over, but when you look at office valuations, it made more sense to tear it down and build apartments. So we went through Live Local, we got our approvals, and we're in for permits now, and hopefully in the first quarter of next year, we brought in a development partner. We'll be tearing down the building and building 380 multifamily units. So it's, you know, just another example. And by the way, that space, that's 107,000 feet of empty office space. It shows up in the vacancy factor. So another thing that I think people don't realize in the headlines, if you look at the office vacancy, which is around 15%, you know, and so that's about, you know, 7.5 million square feet. A lot of that space is duplicative. So our 100,000 feet shows up as vacant office space, but it's not really available because we're going to tear it down. So the real vacancy factor is much lower than the headline between space that's already gone, and then you've got another cohort of space, the distressed owners we talked about, who aren't able to invest, who can't build the spec suites that Donna mentioned that you need to lease space. So you've got a lot of stagnant space in the market. You know, a term people throw around is zombie buildings. I mean, I'm not saying they're completely zombie, but they're zombie-ish. And so if tenants really look for space in the market, they could tour a market and be like, oh, you know, I saw 10 spaces, but there's only 1 or 2 that are actually leasable in their current condition.
And to add to that, David, there's a lot of those ancillary buildings that are now being looked at by the city and the county to build more schools, which is obviously a big issue in Miami. Charter schools, we're speaking to, you know, large private schools that are in New York now looking to enter this market. I mean, you can't even get your kids into private school right now. It's really tough. So I think the city and the county are being really smart on that, and they're doing their due diligence, and they're trying to find land or buildings where they can build schools for the outlet.
Right, we definitely need more private schools. I think we've heard on every single panel that that's one of the biggest hurdles to attracting more out-of-staters, especially New Yorkers. I've also heard that it takes a little bit of time for a private school to establish its reputation, even after the building is built and so on. So it also may not be that easy. I do want to hear from each of you as to what's your expectation in terms of population growth because of Zohran Mamdani's mayoral win in New York City. I've heard sources say that we can expect a bigger influx than what we saw during the pandemic. Others are more modest in their predictions. Donna, what do you think?
I think we'll definitely see more companies move out of New York in favor of South Florida, Palm Beach down to Miami. So many have already come. So I can't say we're going to see more than what we saw during the pandemic, but I think many more are still going to be here. Sadly for New York. Happy for us. We have another bundle of problems that creates for us, though, between schools, housing, traffic, but they're going to be coming.
Yeah, I mean, I certainly could put a number on it, but I have to believe it's going to be some. I know a lot of disappointed New Yorkers today, but, you know, time will tell.
Yeah, I just echo it. I think it's going to be tremendous for South Florida and Miami specifically. We've been speaking to a lot of tenant rep brokers in New York, and they've been speaking to their clients about the opportunity to either expand into Miami or leave altogether and plant a flag. So I think we're going to see a lot of tenants looking here. I mean, we're doing a roadshow next week in New York with all the major brokerage firms, and we're going to be discussing that. So we'll learn more then. But I think it's going to be a second floodgate opening, similar to what we saw in the pandemic.
Right. Are your phones already ringing with 917 numbers or not yet?
I turned my phone off for the panel, so I'll check in about 5 minutes. But yeah, it's probably yes. Yes, the answer is yes.
And another external factor that could have a lot of effect for South Florida office space is obviously Trump's tariff and immigration policies. Latin America has historically and traditionally been linked and intertwined with South Florida. Obviously, we have a lot of our companies, a lot of our residents coming from Latin America. Donna, I wanted to ask you, how do we expect this to change under some of Trump's tariff and immigration policies? Are we going to see less of an influx from people from some Latin American countries, more of an influx from others, and why?
I think it's an interesting time right now because Latin American population always thrives in the U.S. They want to come to Miami. They love Miami. And on one hand, I'd say the immigration policies will slow it down. It certainly will. At the same time, we're seeing countries in Latin America straighten their political issues out. We have several of them that are moving from a leftist regime more to a right. Argentina's got a 40% inflation rate. Chile, Bolivia, all these countries are undergoing new regimes right now. They're overthrowing their communist leaders. So you have that platform going on that really aligns with the U.S. pretty nicely, right? So I think that that will play a role on where immigration goes, and they're going to want to come here. They're getting stronger economies as well. We want them. And then I can't help but think that if we have companies that want to come in, even like whether it be Latin America or Spain or the UK, if they want to come in and bring their C-suite people in, but tell our government we're going to come and hire X hundreds or thousands of employees and put millions of dollars of their money into our market, their capital into our market, I don't know how we say no. I think as long as they do it by our guidelines, it's going to be slower. It's slowing the process up. But I'm sure we're going to find a way to bring all that in with our proper guidelines.
David or Ryan, do you want to weigh in on that?
I mean, I haven't looked at my phone, but I think the Supreme Court is ruling on tariffs today. So I'm not really sure what the tariff policy is. One day it's 80%. There's a bad commercial in Canada. It's 100%. So it does feel like the impact is way more muted than we maybe all feared. I mean, we are looking at that multifamily development, and we factored in some tariff contingency, and the deal still pencils. So, that's positive. As far as immigration, look, the United States is at a point where we've got an aging population, and we need population growth for the economy to keep growing. I don't know what the right mix and what the way to handle that from a political standpoint, but I definitely think in the short term, it's inflationary, right? Just from a labor perspective, if you think about construction trades and, hospitality and things like that. So we're not seeing it. I don't think we're seeing it permeate into the office market yet. But, it's all kind of factors into uncertainty. But that being said, I just think we've had such a big uplift in the economy here. Whether these new to market tenants came, they're buying cars and boats and restaurants and employing people and sending their kids to school and doing all the things that just caused our economy to go to another level. And so we're just operating from a higher base. And so that's really offsetting all these negative, geopolitical headwinds, in my opinion.
Yeah, I agree with that. I mean, I think the office buildings in my world that are being built now, they're redefining our skyline and our submarkets, and the companies that are leasing space in those buildings are redefining our economy in a very positive way.
And final question, Ryan, I'm going to ask you to kind of have a crystal ball and look into the future. 830 Brickell, we talked about it. It was very fortuitous timing. It was a trendsetter. But last year or earlier this year, we saw Swire still cancel its One Brickell City Center super tall. And as we already established earlier, a lot of the projects and the boutique projects that are under development are smaller and boutique. I am just curious, how long will it be until things align, including construction costs, labor, interest rates, until we see our next 830 Brickell 2, 5, or 10 years?
Well, I think it's going to happen soon. Everyone in the room knows that Related and Ken are going to be building their office building on Brickell, and I think that's going to redefine our skyline, and it's going to attract tenants that have never even looked at Miami before, just to be here and to be in the building with them. So I think, look, there's a pause there in terms of timing for construction, but it is 1,000% going, and I think that is going to redefine the future of our hub, of our submarkets in Brickell and downtown, and the people that move into our city.
Okay, I want to thank you all for being here. I think this was a great panel.